How many times have you guys entered the trade for it just to go and hit your stop loss or go the opposite way that you were expecting? Welcome back YouTube, Harry here, known as Trade Sharp, and in this video we're gonna look at how to avoid fake outs. You know, it's very common that some people, they enter trades and it goes the opposite way. This is because they've been faked out. And in this video, I'm gonna make it short and sweet and give you 3 tips to avoid fake outs by just trading price action, and why price action is so important for avoiding fake outs. So with that said, let's get straight into the first tip. So guys, tip number 1 is going to be to understand market structure. I can't believe how many people don't really understand this, and this is the number 1 reason why people get caught in fake outs, right? So understanding market structure is as simple as understanding if you are in an uptrend or a downtrend. But let me show you how most people get faked out here, right? So before we continue with the video, can I remind you guys to please support the YouTube algorithm? I hate saying it, but can you please like and subscribe to this video, because it really helps the YouTube algorithm, helps the channel grow, and helps me push out content, which I do a live stream every Tuesday and push out content on Saturday as well. And down below there are links to the No BS community, where you can chat to me any questions you have in general, or any questions about the video. Come chat to me, chat with our community. It's a great place and you can enjoy my analysis there. So with that being said, let's get back into it. So if you don't understand that you're in an uptrend, I'm going to leave a video up here in the cards that's going to talk about market structure. Please watch that to understand that more in depth. But I'm going to give you a brief overview now if you don't have time. So let's take an uptrend here, right? This is an uptrend like so, right? So very simple here. We have an uptrend, price is continuing towards the upside. Now, since price is continuing towards the upside, we expect price to make higher highs. So this high is higher than this, and higher lows. So the lows are higher than the last low, right? So what happens is that people, if you notice here, that we want to be buying because we want to be trading with the trend, right? We want to be catching these moves here, these moves here, because on an uptrend, if you notice, the downside moves are always shorter than the upside moves, right? Look at this. You can see, like, here's a small uptrend here. We can see we're in a big up leg, small correction. You see, here was a bit of a bigger, but this, you have to understand, was the transition period, right? We were coming from a downtrend going into an uptrend, but once we transitioned and went into the uptrend, you can see here that the downtrend is much smaller than the upwards move, right? And it's also a lot slower. You can see it takes time to go down, and then the upwards move, boom, explosive. Take time to go down, upwards move, explosive. This is like, look, if you got caught out in this, very bad. Now we're in a range. But getting back to the example here, let me just remove all drawings so we can get back to our example. And so what happens is that people, they end up, let's remove these drawings here, they end up trying to catch these downside moves on the uptrend. And if you look at this, and let's say price ranged in between here like so, all right, and then this is where our support and resistance was. So if we were to draw something like this, forget about the line up here, what happens is that people, once price starts to get below here, they look at this as, I don't know what, double top, head and shoulders, all of these reversal patterns, and they think, all right, price is going to continue down towards the next support. But what happens is price continues up like this, and this is where they get caught in and they get stopped out, and then they blame the market. This is a stop hunt and I don't know what. But at the end of the day, the structure didn't change, right? We're still in the uptrend, right? Here's your first leg, here's your low, and then we make a higher high, right, compared to this high, higher high, and then really here we just ranged, and then we came down, we broke out of the range, we did not break the last low. So we're just making another higher low before continuing up, but in between that we had a micro consolidation and a retracement, right? But if you look at the structure, we are continuing up. So understand where you are in the market and understand when structure changes. Let's go to tip number 2. So just a reminder, if you guys do suffer with market analysis and you just can't find the direction or struggle with that, that is why I made these groups down below, because I send daily analysis for free in these groups, and I basically explain why I expect the market to move. And if you see this after for a week or so, you'll basically start to understand. So definitely join the Discord so you can get the daily analysis. So tip number 2 is very simple. I don't even need to give you an example. This is something that you have to do, and this relates to psychology and to having a trading plan. And it's very important. And what I recommend to avoid a fake out is stick to one bias. Once you've done your market analysis, you should have a pretty good idea if the market is bullish or bearish. And depending on what your analysis has given, you should stick to one bias, whether that is bullish or bearish. So if your bias today is that price should continue up bullish, that means you should only be looking for buys. And if you're only looking for buys, then you are less likely to be caught out in a fake out because you're not going against the trend, right? So basically what I'm saying is don't counter trend trade, stick to one bias. There is times when you can counter trend trade, but that gets more advanced. So with that being said, let's get on to the last tip, which is tip number 3. Tip number 3 of how to avoid fake outs is be patient, right? If market is going to reverse, look for reversal structure, right? Look for the market to change. If this is an uptrend here, don't try, if we saw the chart something like this, right? Let's go on the 30-minute, and let's say we saw the chart something like this right here. All right, be patient. We're on an uptrend here, right? Don't be looking for sells below here. Be patient, wait for sells below another range, right? Look for price to get below maybe somewhere here, or even wait all the way till down here, right? Because you have to be patient when it comes to the market changing structure, and you're better off just trading with the trend unless you know how to trade counter trend, which is a lot more advanced. So be patient, trade with the structure, because if you were to trade this, although it looks great now, right? And if I make this a little bit faster here and price tends to continue and close below here, you'll notice when I close this now, oops, let's go back. When I close this now, what ended up happening, price just pulled back and you would have been caught in all of this. So it's very important you be patient and wait for the actual structure to break, because if I draw this, you can see high, low, higher high, higher low, right? You can see that we're in an uptrend. Structure did not break at any time. So be patient, wait for that structure to break. Now a sell below here will be an indication for price to continue down because we've established a new low. So with that being said, thank you guys for watching. Please do leave a like and subscribe if you have stayed on till the end of this video. Let me know of any future videos in the comments below. With that being said, take care, trade sharp, and until next time, peace.